$33.4 billion for AES Corp or GIP and EQT teaming up for a buyout. This massive means the infrastructure mega deal is officially back.
Back? It never left, Nate. But you are completely distracted by the shiny price tag. The real story today is Trian sweetening their bid for Janus Henderson.
Oh, come on. Asset management consolidation is just spreadsheets merging with other spreadsheets.
$52 a share says otherwise. Wait until you hear what they buried in the revised offer. The rundown.
I just love that someone looked at the commercial laundry space and said, yes, this absolutely requires a $5.5 billion consolidation.
Cintas acquiring UniFirst is exactly the kind of unsexy, cash-flowing deal that makes former bankers like you drool.
Hey, I resemble that remark. But seriously, it's a brilliant scale play. You lock up the industrial uniform market, you just sit back and print money.
Speaking of printing money, Merck is practically throwing it at Terns Pharma, $6 billion to bolster their oncology portfolio.
Which is completely necessary. The analysts are calling this the start of a massive wave of consolidation in the oncology space. Merck had to move before someone else did.
$6 billion for that specific pipeline, though. I read the clinical readouts. They're paying an unbelievable premium for mid-stage data. It feels genuinely desperate.
Desperate or just the going rate in biotech right now? You can't organically build a blockbuster cancer drug fast enough to keep Wall Street happy.
Fine, but I still hate the valuation. Let's look at a deal where the premium actually makes sense. Trian and General Catalyst just sweetened their takeover bid for Janus Henderson.
$52 a share?
Exactly, and I'm honestly surprised the Janus board hasn't jumped at it. Asset management is entirely a scale game now. They need this.
See, I completely disagree. I think 52 is still lowballing them. Trian is just running the classic activist playbook. Buy a stake, make a ton of noise, force a merger, and extract a quick premium.
Oh, come on, Nate. The industry watchers are right here. Activists are the only ones forcing these asset managers to face reality. They're bleeding outflows.
We'll see if the board formally responds before the end of the week. I'm betting they hold out for 55.
Good luck to them. Oh, and quick gossip check before we move on. Unilever is apparently in hushed talks to offload its food business to McCormick.
The great consumer unbundling continues. Unilever has been trying to trim that sprawling portfolio forever. Oh, and the beauty sector is buzzing too. Puig stock surged after confirming Estée Lauder is exploring a merger.
Everyone is shopping, but none of these consumer deals even touch the sheer scale of the infrastructure monster that just dropped.
$33.4 billion.
GIP and EQT teaming up to take AES Corp private. Let's get into how you even structure an energy buyout that massive. The big one.
$33.4 billion. I'm just staring at this number, trying to comprehend the advisory fees.
Your banker brain is showing again.
I can't help it. GIP and EQT teaming up to take AES Corp private is monstrous. We're talking about the marquee energy buyout of the year. To put it in perspective, Zurich is buying Beazley today for $10.8 billion, which is a massive specialty insurance deal, and it looks like pocket change next to this.
It really does. But monstrous is exactly the right word for AES, maybe just not in a good way. I read the financing structure this morning. They're leveraging this to the absolute limit.
Of course they are. It's an infrastructure deal. You buy hard assets, you slap debt on them, you collect the reliable cash flow. That's the playbook.
Right, but AES isn't just a toll road. It's a sprawling global power company, and paying $33.4 billion right now? I don't see how the math works unless they plan to ruthlessly chop it up and sell the international segments within 36 months.
See, I completely disagree. You're looking at this like a standard private equity strip and flip. This is a pure AI play.
Oh, please. Don't tell me you're calling a legacy utility buyout an AI play.
I absolutely am. Connect the dots, Maya. What does every single tech giant need right now to run their new data centers? Power. Unbelievable amounts of power. EQT and GIP aren't buying AES to sell off random wind farms. They're buying the grid. They're securing a strategic energy pipeline for the tech sector for...
That's a very slick narrative for the roadshow. But I actually read the footnotes in the press release. Do you know how many regulatory approvals they need? They have to clear utility commissions in 14 different countries.
Minor speed bumps.
14 countries, Nate. And the debt covenants are incredibly tight. If we don't see rate cuts soon, your brilliant AI play turns into a $33 billion anchor. Plus, did you catch the clause about the executive team?
No, what did I miss?
They're keeping the entire AES management team intact. All of them.
Wait, really? Usually when you drop that kind of cash, you want your own operating partners driving the bus.
Exactly. Which tells me GIP and EQT know they can't actually run a global utility. They're just the bank. They desperately need the current executives to navigate the regulatory nightmare they just bought into.
That's actually pretty smart. Keep the operators in the building so you don't accidentally turn off the lights in Ohio. I still think the long-term play is selling dedicated power to Amazon and Microsoft.
I'll believe it when I see the data. Until then, it's just two megafunds overpaying for transmission lines.
Spoken like a true skeptic. But speaking of overpaying, or at least being aggressively pressured to overpay, voices. So the consensus on the street right now is that this Trian and General Catalyst bumped bid for Janus Henderson is proof positive that activists are aggressively forcing asset management consolidation.
I read that note this morning, and I completely disagree with the framing.
Oh, come on. They just sweetened the offer to $52 a share. They are absolutely forcing the issue here.
Sure, the $52 is real, but the activists aren't the root cause. They're just vultures circling a very obvious structural problem. Asset management margins are compressing everywhere. You either buy scale or you slowly bleed out. Trian is just accelerating gravity.
Spoken like someone who never had to defend a management team. As a former pitch book monkey, I'm telling you, gravity is way too slow for these guys. The fear of an activist letter is what actually gets these boards to pick up the phone. You need the push.
I'll concede the push, but contrast that with the other quote everyone is passing around today. Analysts are calling Merck's $6 billion pursuit of Terns Pharma a, quote, massive consolidation wave in the oncology space.
Massive. Right. $6 billion to Merck is couch change. That's a textbook bolt on acquisition.
Exactly. I pulled the Terns pipeline data. This is Merck buying a highly specific insurance policy for their oncology portfolio, not a paradigm shift. It's a smart structure, but the street needs to calm down with the wave metaphors.
If we want to talk about actual waves, we need to look at what's coming tomorrow. Because that Janus board still has to formally respond to the $52 offer before the end of the week, and Gilead is supposedly crossing the finish line on a $2 billion deal for Uro Medicines.
I'll be refreshing the SEC Edgar database at 6 a.m. for that Janus response. Spill the tea. So apparently Unilever is just aggressively cleaning out the pantry.
Literally, the whispers about them offloading the food business to McCormick are getting extremely loud, which, by the way, is a banker's dream pitch. Just imagine the slide deck. Hellman's Mayo meets Old Bay seasoning.
I read the footnotes on their last earnings. They won out of low-margin groceries. But McCormick taking the entire food portfolio? I need to see the financing structure before I buy that rumor.
You never let me have any fun with the gossip. Fine. Let's talk about the beauty aisles. Puig stock is going absolutely crazy right now.
Because Estee Lauder is suddenly floating merger talks.
It's pure corporate theater. Estee is bleeding market share, so they leak a massive merger rumor to distract everyone.
Wait, really? You think it's just a distraction? Estee Lauder actually needs a younger brand portfolio. Puig gives them that immediately.
I think they're just trying to keep the activist investors away. Speaking of which, Trian and General Catalyst just sweetened their bid for Janus Henderson, $52 a share.
Finally, the board has been dragging their feet for weeks. 52 is a completely reasonable exit premium.
Oh, come on. It's an activist shakedown. Nelson Peltz and his crew are just forcing asset management consolidation because they can. Janus is actually executing on their turnaround.
Executing? Nate, their outflows last quarter were miserable. Trian is doing the shareholders a favor. If the board doesn't formally respond to this $52 offer by Friday, they're committing fiduciary malpractice.
Wow, tell us how you really feel. Maya defending the activists, mark your calendars. Next, you're going to tell me Merck paying $6 billion for Terns Pharma is a value play.
For their oncology pipeline? Yes, actually. The consolidation wave in healthcare is entirely justified right now.
We're going to have to agree to disagree on these valuations. But speaking of massive numbers, I'm still trying to wrap my head around the biggest power play of the week.
You mean GIP and EQT casually dropping $33.4 billion to take AES Corp private?
Exactly. Let's pull apart how they're actually funding that absolute monster. Tomorrow's radar.
I'm setting an alert for the Janus Henderson filing tomorrow morning. Try and bump that offer to $52 a share, and the board has been completely silent.
Silent because they're scrambling. Activists are forcing consolidation down the throat of the entire asset management sector.
Or they're just doing their fiduciary duty. 52 is barely a premium if you pull their historicals.
Oh, come on. 52 is a gift. But fine, while you refresh Edgar, I'm watching the Unilever gossip. They're reportedly talking to McCormick about offloading the food business.
Wait, really? McCormick? That's a massive pivot from the private equity rumors last week.
Exactly. Big Spice is making a move. Also keep an eye on healthcare. Gilead might finally announce that $2 billion Uro Medicines deal tomorrow.
Assuming Merck doesn't steal the spotlight first with that $6 billion Terns Pharma buyout. Oncology is just eating the whole sector.
We'll see who drops the press release first. Send us your wildest deal rumors on Twitter, and we'll catch you tomorrow.